Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We welcome James Bianco. I will make it as clear as I can. No one, with the nodding exception of Mohamed El-Erian, no one nailed resilient inflation coming out of COVID like Jim Bianco. He joins us today with Bianco Research. Jim published moments ago at Apollo Global Management. Torsten Slok had huge respect from his time at Deutsche Bank. I quote Jim, "Container ship departures from China to the U.S. are collapsing when consumers cannot get the products they want from abroad and the products that are imported are more expensive. The outcome is a slowdown in U.S. consumer spending." Jim, you know, consumption 70% of GDP. Are you modeling out a tepid real GDP?
Yeah, I think that the real growth in the economy is going to slow. I don't have it going anywhere to like a recession. I also think the other thing you got to keep in mind that gets very little discussion is the closing of the U.S. border, because most of the population growth of the United States comes from immigration, whether it's illegal or legal. And that's going to dramatically slow. And that's also going to slow down the economy as well. But again, I don't think these numbers are going to produce anywhere near an inflation or, a recession. And also, I don't think that cutting interest rates is going to solve these problems. All cutting interest rates are going to do is try to inject what we have with steroids, and it's just going to produce more inflation. It's not going to produce higher growth.
I'm not going to mince words, folks. The conversation that John Farrow had yesterday with the Secretary of Treasury was the single best conversation I heard, because it allowed us to hear Bessent theory. John Authors is quite critical. He'll be on later in the show. And now we have Jim Bianco. What does Bessent get wrong, Jim Bianco, about 4, 5, 6, 7 rate cuts?
Everything. Can I say that?
He's so
basically,
diplomatic.
he said,
He's such a gentleman.
Yeah, he basically said any model suggests that that interest rates should be cut by 1.5% to 1.75%. I'll come back and say to you that there's no model that says that if you have a 3% interest rate, that you should be cutting interest rates by that much. And John Authors authored something about that yesterday, and he'll talk more about that. That the idea that interest rates should go below the inflation rate when the inflation rate is this high is unprecedented. It's never been there when it's been above 3%. It should stay above the inflation rate by some premium. And that's why I think that the current funds rate at 4.25 to 4.5 is very close to neutral. And that's why I was saying earlier, if you want to cut interest rates, and the Fed looks like they're going to, you're not going to get the desired economic growth outcome. You're going to get an inflationary outcome.
So, Jim, going back to the labor, and again, we're going to get initial jobless claims today. What is a reasonably, I guess, decent growing economy? How many new jobs per month does an economy need that's growing at a decent clip?
This is the question that economists seem to be skirting. With the population growth slowing as much as it has, and the president putting out a Truth Social post last week saying we might have net negative immigration growth, more people leaving the country than entering. For the first time in American history, the population growth might be down around zero. If that's the case, you can make the case that anything, and I'll quote the American Enterprise Institute has put pen to paper on this, anything around 10,000 jobs a month might be enough. So when we freaked out about 19,000 jobs, 14,000 jobs, 73,000 jobs, what we were doing is we were assuming this is the way it was when we had the border open and we needed 80 or 100,000 jobs a month. We're now in probably a 10,000 job a month range, and that is enough jobs. And again, if you're going to cut rates because 10,000 jobs is too small, you're just going to produce inflation.
Bottle it, folks, what you just heard there from James Bianco. Paul, I hereby call it the Great Reset. That's why I'm stealing that from Lisa Mateo. She has a great reset with Uncrustables, but I'm calling it the Great Reset. People don't understand what Mr. Bianco said. And Paul, I got a bunch of questions on this. Please step forward here, Paul, and continue this discussion, folks. This is so important in honor of Angus Madison about a changing America.
Jim, as a result of kind of what we've just been talking about here, are we in a world of just elevated inflation? Should people get used to what they're paying in the supermarket, for example?
I think we are. I mean, the Fed has a target of 2%. They cut interest rates last year in September of last year, a year ago, when the core inflation rate was over 3. The core inflation rate's 3.1 right now. They're about to cut interest rates again with it over 3. Forget what they say. Forget that, Jay Powell, will say in his September presser that we're strongly committed to our 2% target. They're cutting interest rates with it above 3. So they're telling you that the 2% target is no longer the target. It's closer to 3. Now, why does that matter? Indeed, the website that does jobs did a study, and they said something like 35 or 40% of the American public is not getting raises equal to the 3% inflation rate. So that's probably the bottom 35 or 40% of income. So we're just going to tell those people, sorry, your job is going to continue to give you raise increases above the inflation rate. So every time you go to the store, you have to buy less things because prices are moving up faster than your paycheck. And that's where that becomes important. I know a lot of people on Wall Street shrug their shoulder. 2, make it 3. What's the difference? For a third of the country, it's a big difference if you can't get the inflation.
Jim, let me ask you the question again. Folks, an interpolation is where you have a belief and you have something else to look at and you try to guess or interpolate what the numbers should be. So, Jim Bianco, if I have flat population growth as a general statement, and I've got the way we frame the unemployment rate, let's call it 4.2, 4.3%, to pick a number, when we do a Bianco interpolation, is 4.5% the new 5% unemployment rate?
No, I don't think it is, at least in that regard, because, not to get too wonky, but the unemployment rate is measured on a household survey. And that's one of the reasons why I think you saw with the payroll report falling, the unemployment rate didn't rise. We don't have, with slow population growth, every month, thousands of people entering the workforce. Either they're turning 18, which is one way you can enter the workforce, or they're coming into the country new, looking for a job. So that's why you could have slow payroll growth and not high unemployment. And I thought it was kind of interesting because Chairman Powell has mentioned the supply of labor, which is their phrase for, slowing population growth, and said he's more interested in the unemployment rate than he is in the payroll report. Because if nobody's coming into the country and no one's looking for a job, these slow numbers may not produce higher unemployment. So I think that, the 4.2 number is what it used to be. And that's why it's not going up. The unemployment rate is 4.2 a year ago when we were still producing 100,000 jobs.
How do you carry this over to the equity market? If we talk about a flatline demographics, does that mean a more tepid, demure stock market?
Not initially. I mean, the stock market is all about cheap money, and it sees the Fed is going to be cutting rates, and it's celebrating the idea that cheaper borrowing costs are coming, and it's going to keep going from there. But over time, yes, it will take away some of the growth of the country. Nominal GDP will go down. That's real growth plus inflation. That should, over time, hurt earnings. And over time, let me go on another direction here for you. It should help to correct housing, because one of the problems with housing is there's not enough houses. Everybody talks about the affordability crisis. When we have home prices at all-time highs, we don't have enough houses. Well, if you slow down the number of people that need houses, over time, that should correct itself too. Now, it's not all good. I mean, you'd rather have growing population faster than slower, but those are some of the immediate effects if this continues.
Jim, are you surprised the U.S. dollar's not rebounded like the U.S. equity markets have rebounded?
Not really, because I think what the dollar did was after Liberation Day, when it disconnected from interest rates, it reconnected. And so when you get lower interest rates in the U.S., you tend to get a lower dollar. When you get higher interest rates, you tend to get a higher dollar. So I think the big driver of the dollar right now is back. It wasn't for a while, but it's back to being interest rates. So as long as they're headed down, I think that's going to keep the dollar relatively weak. Most currency traders are playing this relative interest rate game. Where can I get the highest interest rate? And if our rates are going down, it becomes less attractive.
Hey, Jim, we pretty much through the second quarter earnings here. How did they look to you? How's corporate America dealing with this current economic environment?
It's looking great. I mean, more than 80% of the S&P 500 companies beat. The guidance that the companies have given has been the most positive in 4 years. The outlook for the second half of the year looks very good. So at least in the interim, it looks like if you were to judge corporate America as an economic indicator, they're telling you that the economy is doing very well.
Jim, I think your comments on the Secretary of Treasury are apt. And again, John Authors was scathing, and we'll have him on here later. At the beginning, I thought John Farrow was brilliant. At the beginning, Jim Bianco, the Secretary walked through his belief of the diffusion of tariffs from the export country to the importer at the shore to the consumer. And to me, with all I've read, including Douglas Irwin, the classic at Dartmouth, it was all Greek to me. Critique the Trump-Bessent theory that the consumer won't pick up the burden of these tariffs. And the zeitgeist this morning, folks, is Michael Barr. He is every morning in the food court, folks. Michael Barr has a bowl it's a bowl of Raisin Bran with a banana on it, but it's actually a bowl of bananas with some Raisin Bran. I mean, Jim Bianco, the bananas alone are already killing us. Are these tariffs going to pass on to the consumer, unlike what the Secretary of Treasury says?
I think eventually they are. You're right. There's three people that can. Let's bear in mind that tariffs are up by about $250 billion. So to put it in the vernacular, somebody's paying an extra $250 billion for a product that we weren't because of tariffs. Who's paying that? Well, you got three choices. The export country, that means China cuts its rates, Japan cuts its prices. Japan cuts its prices of things that they ship to the United States. That might have been happening in the first 30 or 60 days after Liberation Day, but it looks like it's reversing right now. They did it as a panic right away, didn't know what to do, but now they're starting to reverse that and bring it up. The other one is the importer, the company that imports it. They're going to cut their prices to the consumer. Well, as I mentioned with corporate America, margins are fine, and corporate America earnings are doing fine. There's no sign that they're eating $250 billion. Worth of prices. So that leaves the price at the store. That will eventually start to go up. And there's some evidence that those prices are starting to go up. Remember, in May, June, July, what you were paying for was stuff that was already imported without tariffs. But as you get into August, September, October, and further, now the stuff that's going to be on the shelves have that tariff price embedded in it, and that's going to start to creep higher.
Jim, this has been absolutely brilliant. Thank you so much. Jim Bianco with us today. Really appreciate it. Bianco Research. Can't say enough. Folks, this is what surveillance is about. The conversation back and forth, not to say someone's wrong or right, but to engage the debate. And we see that right now. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This is Joy. And as you were talking earlier about options of Greek letters, the movements of the market, we continue with Dean Curnutt, and thrilled that he could be with us today with Macro Risk Advisors. Dean, I'm kidding about it. I mean, my father said we were almost named Greek letters, alpha, beta, gamma, delta. You didn't do that to your children, did you?
No, we spared them that.
Spared them the Greek letters. One of them is theta, which is the guesstimate or misjudgment of the time function. How badly do you see us misjudging our economics now with a tariff overlay that completely screws up our theta, completely screws up our x-axis?
Well, I would first want to start with the reality that theta has very much been on the mind of those who've paid money to own options. Options are valuable assets. I always say the right to change your mind is at the heart of options, and that's valuable. but you pay for it. And theta is a reflection of the decay of that option price as time goes on. And in an environment in which the S&P is realizing 10, there was a stretch for the triple Q even over the course of a month where the realized was just 8. That's a lot of theta. Your option, your insurance that you've paid for is decaying over time when you're not getting the moves. And I think, that's an important thing. You're looking forward in terms of thinking about tariffs and trying to understand the lags with which they operate. I think that's a big thing. People say monetary policy operates with lags. I think the same can be said for tariffs as well.
Option advice with Dean Curnutt. The amateur piles into an option, certain that they're certain, and they lose their money. Nassim Taleb is one example, says bet little bits of money farther out. Discuss those two hugely different approaches.
Right. So I think in an environment of shortening attention spans, where it's just the latest tweet, it seems everything is happening on a very compressed time horizon. And I think investing is an example of that, where we've got this proliferation of 0 days to expiration options. And I think there is a misjudging very consistently by investors, where they look at the nominal price of an option and they think, oh, that's a very low price, but it's only got 1 day to expiration. And so it's just not worth that much. The opposite's also true. Investors misjudge the value of time with respect to longer term options. And so, as an example with private credit, really what you're doing there is you're clipping some coupon, some excess yield, but you have given away a lot of optionality. And that optionality is the right to change your mind, the right to unwind your portfolio. So when time horizons get extended without the ability to make decisions very quickly, you're effectively, in some ways, short optionality. And it's a big reason why I think at this moment, where I see uncertainty really building and uncertainty being inconsistent with the price of insurance, I think it's very important to do two things for your portfolio. One, as you need to stay long in the S&P, I say it's a benchmark that's very easy to track, very difficult to beat, but overlay some insurance, basic put spread insurance on the S&P 500, and then also really search for diversifying assets. For me, those are gold and Bitcoin. I think those are valuable overlays on a portfolio at this time.
In your market, the futures and options market, are your clients, are they buying protection these days? Are they buying risk these days? What are they doing?
Well, I think it's impossible not to be long risk.
Okay.
Boy, that S&P is a beast of a benchmark. It's long the CapEx cycle. It's long the mega caps, which are delivering so much, return. They're delivering so much of the earnings, 12% year-over-year earnings. But they are buying protection, and they're frustrated. Tom used that word theta. There's an old saying in markets, theta is the rent on gamma, which is gamma is the good part. Gamma is what you want. It's the convexity that Tom talks about. It's the right to change your mind. Theta is the tough part. That's the bleed. And there has been a lot of it. We have gone through a period, just to give you another statistic, the HYG, right, which is the junk bond ETF, this is moving over the last month less than 20 basis points a day. It's as if the index was closed for a month. And again, what happens is option prices get pulled down when there's that little movement. And so the setup here as we enter what I think is a seasonally valuable time to own options, as we come back from vacation, people sharpen their pencils after Labor Day. And it just tends to be the case with some consistency that there is a little bit more of a risk-off character to the market late September through October. So I think this is a time when, at least our advice to our clients at Macro Risk Advisors is, let's take a very good look at your portfolio, what it's exposed to, and overlay some protection. Don't break the bank, because you can overinsure yourself, that's for sure. You can buy too much protection, and if it doesn't pay off, you're left sacrificing return. But there are easy to do, basic, and I would argue cheap option overlays to do that can protect the portfolio.
What's the one you like the most these days?
Really simple. Something like a 2-month put spread on the S&P, struck at 5% out of the money is your top strike, and then to reduce the cost of it, which is important because again, the realized volatility is low. So you can't spend too much. So sell something like a 20% out of the money put. That's going to get you through October, which is again that seasonal period of higher vol.
Can you hedge Mag 7?
Listen, the Mag 7 is 40% of the S&P, or at least the top 10 stocks. That's not the Mag 7, but the top 10 stocks are 40%. They're also remarkably 26% of the MSCI World Index. That's the top 10.
I did not know that. The American Mag 7 are 1/4 of the ginormous global index.
It's incredible. I think I just saw a stat. It was probably on the Bloomberg terminal. That NVIDIA is bigger than the entire German stock market in terms of market cap.
How do you hedge that? I mean, folks, I know everybody out there owns NVIDIA and you're never going to sell it. Adults in the pro market can't do that. How do you hedge, protect yourself?
Yeah, and I think this is a really important point. It's something I keep coming back to, is that these stocks have hedged themselves. The correlation between Microsoft and Google or NVIDIA and Amazon, they're just, unbelievably low. And so I think that's a blind spot for investors, is that because these things are uncorrelated, they're very low in terms of the overall volatility of the S&P 500. Right. And if we've learned one thing, it's that missizing is your biggest risk. Right. And that comes from underestimating volatility. So honestly, back to the put spread on the S&P 500, because these things are such a big part of the market cap, just don't put spreads on the S&P.
Did I see your son Beta come in here? I mean, you got.
Sometimes I name him Epsilon.
You got they're interns for you, right? You make them work.
I do. He's on the terminal. He's doing spreadsheets. It's been really fun. It's been a great summer.
Next generation coming up.
This is just great.
That's how you do it.
I wish Bruno Dupier was here. One of the giants of derivative mathematics wanders through our food court from day to day. There's a thing called Ito's Dilemma, which Bruno Dupier, that'd be great for your son to be Bruno. You're going to figure that out. Dean Curnutt, thank you so much. Really, really wonderful. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Cam Dawson briefs now with New Edge. What does an under 15 VIX mean to you?
It means calm waters, that this market has been extraordinarily resilient in digesting headlines that we might have thought could cause more volatility, mostly in a month like August, where trading volumes are lighter. But this market continues to just power on, and we think it's driven by two key things. The first one being that liquidity remains very abundant. And the second thing is that earnings estimates are going up. Risk assets love it when earnings estimates and growth estimates are going up. So when you distill it down to those two things, you can see why we've been resilient. But of course, it makes you raise an eyebrow if we're thinking we could be becoming complacent.
Any rotations out of what's really been working, what's always seemingly been working, the big cap tech names? Have we seen any? Are people trying to broaden out at all?
Yesterday was a big rotation day under the surface. It looked calm on the surface of the S&P 500, but kind of like a duck spinning its legs under the water. We were seeing huge rotations where you saw the NASDAQ, AI trades all trade off rather sharply, and things like Russell 2000 doing a lot better yesterday.
But that could be a one-off, right? I mean, in this environment,
yes.
How does someone like you bet on a rotational shift?
Well, I think the one thing that we've been noting over the course of the last few days is that growth versus value has gone parabolic in the last month or so, meaning that growth has outperformed value almost in a straight line up. Mm-hmm. And what we see is after each of those parabolic moves, we had one in December of last year, we had one in July of last year, that you typically see a correction, meaning just a reversion back to the mean. So we wouldn't be surprised if you saw growth take a breather because it's been so strong, but that doesn't mean it's not still in an uptrend, which it still very much is.
How much does this market need the Fed to cut? Do they need a gradual cut? Do they need something more aggressive? We've had talk of a 50 basis point cut kind of creep into the conversation, not just 25 in September?
It's the why they're cutting, which is so important. If they are cutting because growth is much weaker than expected, we're marking down forecasts, then them doing a 50 basis point cut because the economy needs the stabilization, that's not good for markets. If they're cutting because they they want to get to this idea of neutral, inflation has moderated, growth is slowish, but still healthy, then that's a place where markets tend to celebrate. But it's two very different scenarios.
I mean, I know you weren't listening to the show earlier, Cam, because you're out signing autographs, but the bottom line is off the Bessent interview with Jonathan Farrow yesterday, this idea of cutting rates massively has a massive ambiguity to it. I mean, on a microeconomic basis, it could cut either way.
Well, there was a line down Lexington for the autographs, if you were wondering. The second one is that it really depends on where economic surprises go for the response to rate cuts. Last year, when the Fed cut rates by 100 basis points and the 10-year went up by 100 basis points, it's because economic surprises were going straight up. Data coming in better than expected, as well as GDP forecasts being revised higher. They were being revised higher by almost 70 basis points during those months.
Do you have a clue what earnings are ending 9/30? JP Morgan will be 10/16, 10/17-ish. Technology will be November 1. Do you have any clue? How do you do it?
Well, we're in the 270-ish range for 2025. We do know that earnings have continued to come in better than expected. Look at the second quarter, 11.8% growth versus the 4.9% that was expected going into the quarter. But then as you turn your eyes to 2026, there's about a $300 estimate for S&P 500 earnings. That includes not only an acceleration in the top line, but over 100 basis points of margin expansion. So there's some optimism that's already being contemplated.
So we come down, Lisa had the right language, Crater captures it, and then we come back a little bit here and we stagger economic data to economic data. Cam, what's someone with a portfolio supposed to do? Do you ignore this?
Yeah, well, it does feel kind of staggy. We've been calling it stagflation light. We're saying that it doesn't taste great, less filling. This idea that it's not your full stagflation heavy that you got in the 70s with higher unemployment and soaring inflation, but this is an environment that is harder for earnings growth to operate in. It's one thing when earnings are strong because you have strong real GDP plus inflation, but weaker real GDP plus inflation is something that is harder for risk assets. So with valuations trading so high, we are not surprised to see this be a cause for volatility.
Yeah, I mean, you see this, again, this inflation data on the PPI level, the producer level, well higher than expected, well higher than the last period. It suggests that maybe somewhere in the machinery out there is some higher price pressure. And then the question, I guess, becomes, at what extent, if ever, does it get to the consumer?
Well, we're run rating at over $300 billion of tariff revenue raised. So at this point, someone is paying for it. And in the CPI data, it looked like the consumers aren't paying for it yet.
There you saw the business paying for it.
But the PPI is telling you that businesses are paying for it.
This is really important, Cam. I mean, I got nothing to do tonight. And I'm looking at Newark, New Jersey, and for $5,400, me and Mrs. Keene can sidle up really close, the infinity circle, to see one Catherine Perry.
I'm going to that.
You're going to that? Unbelievable. What a small world. Wow. Katy Perry, I mean, she's just, what she did with Greg Wells, it's just amazing, the songs, how they've endured.
Look, I'm considering dressing up as a shark, specifically left shark.
Okay. Do you have Rockstar Infinity Circle seats?
I doubt that. Yes, I doubt that.
It's almost sold out. I mean, she's killing it.
Where's she playing?
Newark Prudential Center.
Oh, nice. The Rock.
In Newark. Cam Dawson will be there.
Right, awesome.
Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Tina Fordham joins now for a good conversation to find the moment here and frame not only Alaska, but after Alaska. Tina, let's start with Helsinki. they're older. I think we have a good understanding of Mr. Trump being older. In what way is Vladimir Putin older as compared to Helsinki in the first Trump administration?
Well, in fact, I've just returned from Helsinki for the Geoeconomics Week, where there was a lot of discussion about this meeting and, what lessons might have been learned since 2018 when President Trump last met with Putin. Again, didn't have others in the room. No one is exactly sure what was said, but have both sides learned to understand each other better? Well, you can see what President Trump is coming into this meeting with. There's both, more bad cop than we're used to from Trump to Putin. He's insisting that a ceasefire emerge from this, but he's coming in with some carrots as well. And so for Putin, who has been, running Russia for 25 years and does think in geopolitical terms more than in transactional terms, Putin's playing a long game, and he has said, one of his most famous quotes is that the greatest geopolitical catastrophe, was the collapse of the Soviet Union. So you have one leader coming in with a transactional perspective. He wants to do a deal and then go straight to a second meeting. I think Putin is going to do a bait and switch on this one.
So, Tina, what are the expectations here? Usually when you get a summit of the leaders of Russia/Soviet Union in the U.S., it's months and months of preparation by underlings, and then the two principals come in and sign a couple documents and take photographs and claim victory. That's not the case here, is it?
Well, not at all. And so it strikes fear in the hearts of diplomats and foreign policy types, because you never want to put your leader in a position where he's not sure what's going to come out of the discussion, right? You want to, game out the possibilities. You want to have your responses in reserve. You don't want to leave a lot to chance. That's not the way that Trump works. He's said before that he likes to decide at the last minute. He likes things to be less scripted, less choreographed. The risk for Ukraine and for Europe is that that Trump wings it and accepts something that Putin suggests, which maybe sounds reasonable, but Putin will have an ulterior motive behind it.
So, Tina, how unusual is it for this type of discussion to take place without one of the principles, that being Ukraine there? How much does that limit what can actually get done?
Well, Putin likes this construct, right? It returns him to the position of Russia being a great power, as it was during the Soviet era. And I said before this that he was never going to allow Zelensky to be in the room for two reasons. One is that would elevate Zelensky to being his peer, which he doesn't accept. And second, because he doesn't accept that Ukraine is a real country. So it is going to be difficult to have this trilateral meeting ever take place. But what Putin wants to happen is to get hold of the concessions that Trump is ready to offer him. There's been some talk of sanctions removal on aircraft, for example, and kind of get on that new trajectory that will allow Russia to, rejoin the international financial system.
Across the nation and worldwide, Tina Fordham, Fordham Global Foresight, with us this morning here on the summit. Anne-Marie Horton landing momentarily in Alaska. We'll have complete coverage starting early tomorrow from Anchorage. Tina, Mr. Trump has to calculate his term. He's legacy building. I think Paul had a great phrase for that. I guess there are midterm elections, there's senatorial elections. We have a presidential election in 2028. Putin's serving 2 terms. He just had an election last year. So is he a lame duck president, or is he president for life in Russia?
Well, he's president for life. I mean, I think that's an easy answer. There's no bench. There are no successors. Everyone always talks about the lifespan of Russian men. Clearly, Putin has the best in medical care. He seems very robust. He's not going anywhere, and no one else is authorized to take decisions. So he loves this idea of he and Trump together, mano a mano, determining the fate of the free world. That's a very comfortable position for him,
right.
and likes it too because he doesn't like middlemen.
Okay, but Trump has to face American politics and the reality of what I believe is still a democracy. What is the incentive for Vladimir Putin to do anything here except a photographic moment?
So the U.S. has been very clear that they want an agreement of a ceasefire. The reason why I said my prediction is for bait and switch is that I think that Putin has to say, yes, I'll agree to a ceasefire, but with a bunch of conditions that won't be met. And so what he wants is to get to that second meeting, to start to get sanctions reversal, and to bank on Trump's impatience with the duration of this conflict. The other thing Putin wants to do is roll the clock back to that meeting with Zelensky in the Oval Office, being told off for not saying thank you. It was after that that Trump started to talk about secondary sanctions. I don't think that Trump wants to sanction Putin. We saw what his preference is, to sanction countries like India, ostensibly for buying cheap Russian gas. So, markets have got themselves convinced of taco. Switzerland didn't get taco. India didn't get taco. But China and Russia keep getting a pass. To your point about the midterms, it's quite evident what the play here is to generate, a lot of wins, a lot of, peace deals agreed, whether that's between Armenia, Azerbaijan, or elsewhere, and to have a strong record to run on. But history suggests that the Russia-Ukraine conflict will most likely wear on.
Tina, yesterday there was a call between President Trump and the leaders of the European Union, including President Zelensky, presumably, I guess, to preview President Trump's plan for the summit. Do we know what was said on that call? Do we know if any agreements came from that call?
Well, what we know is that the European leaders certainly feel like it was a good conversation. Maybe they're putting a brave face on it. J.D. Vance has been here in the UK. There's lots of talk in political circles that he understands the context more than he did before. And there is a sense that the U.S. will not kind of sell the farm when it comes to the terms of a deal, but land for peace is going to be very concerning for Europe, because the strong sense is that after Ukraine, next come the Baltic states.
Yeah. Okay, thank you. Let's end on that. I think, I just mentioned this with Leanna Fix over in Germany. I mean, to me, it's okay, let's bring it up, folks. Tina Fordham, are we essentially heading towards a European domino theory with Vladimir Putin?
Not yet, not yet. But you can see who's building up their military and who's meeting and exceeding that NATO 2% target to 5%. It's all the countries that are closest to Russia. And that is something that I think if you're outside of this part of the world, it can be very perplexing. It's not just a matter of ending the war. It's about the terms, because a bad peace deal in Ukraine is a green light for further Russian incursions.
Tina, one final question. We got to get back to the markets, but I just think this is just absolutely critical. Do you assume, as a grizzled pro of international relations, that we're on to some new regime, or after Trump, do we find ourselves back somehow to name your theory, the Washington Consensus, Zakaria's post-American world? I'll let you name 6 other theories. You're better than I am. But are we like beyond what we grew up with, or do we revert back to that somewhere out there?
I think that I interpret President Trump's positions on changing the U.S. role in both the security and the economic order as something that it capitalized upon maybe a vague sense amongst the American population that the system wasn't working for them. So for the U.S. to withdraw itself from the global order that it created post-World War II is dramatic.
Right.
But we saw this in microcosm here in the UK with Brexit. It's very difficult to unscramble the egg. Trade data tells us that globalization is continuing, but the world is a security-first world. And I think that is the part that market participants and business leaders have had trouble coming to terms with.
Terrific brief. Thank you. Tina Fordham, Fordham Global Foresight. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Ladies and gentlemen, Ms. Mateo and the newspapers.
Popular demand. Okay. I want to start with Walmart. Okay. They're the country's largest private employer, as you know, right? But it's making this move to keep and attract new workers because it is extending this popular employee perk. It is a 10% discount on nearly all grocery purchases at its stores and online. That's huge. That's the price of groceries nowadays. So in the past, what they did is that it applied to like fresh produce, general merchandise, but it didn't include things like milk, which is big, pasta, frozen pizza, meat. It didn't include, except during the holidays like November and December. So now they're bringing that back. And what it also does, it brings it back closer to the competition because, for example, you have Whole Foods, who's owned by Amazon, and they offer workers a 20% discount, on their items. Obviously, their items are more expensive, but Target offers a 20% discount on fresh and frozen produce for their workers, too. Deal. So this is really big. I mean, people are struggling to pay the grocery bill, and this is a huge help for families. So that was a big move by Walmart.
I want to make clear, folks, we make jokes about it. There's nobody around the table here that's worried about the marginal banana. But the answer is this is serious stuff. Particularly if you have children. Remember, you used to look at a bag of groceries and go, that costs me, like $8 or $12. Now you look at a bag of groceries and go, that's like rent.
Yep. It's big. We saw that, the prices went up during the pandemic, and we said, are they ever going to come down? And we kind of knew they weren't, and they're not.
Next.
Okay. Paul, when you go to Italy, you can actually bring your pup with you.
Really?
Leave it at a pet hotel.
Really? Now we're talking. I don't think they want anything to do with Seamus.
Seamus can live in luxury. Okay, this is a new trend in Italy because apparently families have been having fewer kids, but the number of pets in households in Italy have been on the rise. So the country's pet service industry has really been exploding. So in Rome airport's its newest luxury hotel, it's called Dog Relais. I'm sorry if I'm not pronouncing it right. It's Relais.
Yeah, Relais is a hotel chain.
Thank you. There you go. It can house about 40 pets, but they get underfloor cooling, air conditioning, lavender oil scents, arnica massages, okay? This communal garden. They even have large screens so you can video call your pet when you miss them. I'm
looking at Bring Fido here. It's a website. Yes. I want to know, can we bring vet bill and kennel fee to the Hassler next time?
Okay.
Here's the answer. Hassler Roma does not allow dogs. Please choose a different pet-friendly hotel in Rome.
Wow. Oh, done.
Crushed.
Now, as far as the price, though, I'm not sure what you pay when you board your pets because I'm not familiar with it. But their prices are from about $46 to $70 a day. Is that expensive? Is that cheap? Is that
no fun?
Okay.
It's cheaper for me to pay the au pair to come over and take care of the beasts than to go to the kennel. Kennel fee's outrageous.
It is.
Next.
Okay.
Give us one
This
more
last
quick
one.
here.
Yeah, quick one. David Ellison, he wants to make more TV shows and movies. He plans to boost film, TV production.
Paramount.
Yes, Paramount Skydance. More content for Paramount streaming and produce as many as 20 movies a year. He's putting on the list of priorities. He wants a third film in the Top Gun series. He wants more Star Trek. So this is what he's talking about. The film studio, it hasn't turned an annual profit since like 2022. So it's a big thing for them.
Yeah, it's tough. You have to have these. You have to have scale. You have to put out a lot of films, like maybe a dozen big budget films. If you're
To get
Paramount
one that
or-
hits.
No, just to get 3 or 4 that get you that $1 billion global box office, and they weren't doing that, and they don't have the franchises that Disney has, but. Maybe Top Gun 3. Look at how many Mission Impossible cruises put out. 6, 7, 8 of those. Do the same thing with Top Gun.
Do the sequels still do, like I noticed there's like Jurassic Park 8 or whatever.
They trend down for the most case.
Yeah.
But every once in a while you get a Jurassic Park 4 that does great,
Newspapers, let us know by email, by text, by live chat on YouTube. Should we do newspapers tomorrow with Lisa Mateo?
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.